Hi everyone, in this video we're going to be looking at the Chapter 2 exercise and go through and review some of the more challenging problems together. So with that said, let's get started. All right, so in this first section, I'm not going to spend too much time here. This is mostly just, a selection of drop downs and things of that nature. And so I'll let you all refer to your book and your notes, etc., to answer questions there. But I think you guys probably will get the gist. But remember that there's a scroll bar on the side that you have to click and select to move up and down. And that's just pretty much defining terms. Okay, for exercise 2, we're going to go through and identify the account type, normal balance, and where it appears on the income statement. So again, very similar. I don't want to take away from having you guys do this on your own with too much explanation, but we can look and see something like service revenue is going to adjust equity. The normal balance is going to be on the credit side, and we're going to have that on the income statement. So you'll see all three of those red X's disappear, and I will let you all work on completion. Okay, so now we're going to look a little bit at what's funny is the feedback area here. You're going to look at how we're going to record these transactions. So when we're looking at incurring utility expense, how do we do? Is that a debit or credit to record it? And so this is going to help understand. You can use this acronym dead circle to understand what side of the left or right side of a T account here is the increase and decrease, and whether a debit or credit. And so for something like an expense, we can see the expense is on the left side, debit's on the left, credit's on the right. And so you'll see selecting crediting to reduce an asset here. So our feedback tells us good, or if we do the wrong answer, it'll give you an explanation there. So that is the way to answer those correctly. Again, I'll let you all kind of work through those. This is a very similar type of problem and exercise. Excuse me. So if we say we're going to be paying to purchase new equipment, cash is going to be one part of that, and then equipment will be the other side of the entry there. That's an asset account. Equipment is also an asset account. Cash is going down. Equipment is going up. Whoops. Decrease there. And then to decrease an asset is a credit, and to increase an asset is a debit. So that's how you're going to go through and answer those questions. Again, I'm going to let you all work through these. If you have any questions on how to answer those correctly, please, bring them to class, shoot me an email, so on and so forth. But I'll let you all finish that part out. We want to do journalizations for the following transactions. So when we're looking at journal entries here, we're talking about paying and $40 to shareholders. And so when we do our drop downs here, you can see you've got kind of a selection of debits or credits for each one of these. And so you need to know, the credits are indented, the debits are not. And so we need to figure out exactly which we want to debit or credit. So in this instance, we want dividends to be increasing, and we're paying them. Whoops, that went wonky. So we want to selected the wrong thing there. Okay, so then you can kind of see how that goes through. I think you can type in any explanation. You just have to put in some words here, and we'll just say paid dividend. So every journal entry will just need an explanation of some sort. And then if we're looking at inputting the debits or credits here, we just need to put those in correctly. And so obviously, as we've got the first, we want to do our debits first, credits second, and that basically fills out the journal entries for us. So maybe I'll do one or two more, and then I'll let you all work on the residual. But let's see here. We received $140 for services to be performed next month. So again, if we're receiving cash ahead of time that before we have earned it, then that's going to be an unearned revenue liability, essentially. And we'll just say customer deposit. Again, any explanation there gets that to fill out. Then we can put in our debit to increase the cash we got and record our liability for the fact that we have not yet earned that money. Let's see. On down here, we bought $20 of office supplies on account. So we're going to debit our office supplies to increase the asset account of office supplies. And we're going to credit. The key terminology here is on account. And so that's going to, spur a thought in our mind that, when something's purchased on account, that means we have not paid cash for it yet. We've incurred a liability, an amount that we will owe for that amount going forward. So we'll just say purchase of office supplies, and our office supplies asset account is going to go up $20, and our liability accounts payable is going to do the same thing. We performed $160 of services for a client on account. And so this is kind of, again, we're talking about on account, accounts payable up here. In this instance, we're going to be looking at accounts receivable. And those are amounts that we are going to receive. Remember, accounts payable is amounts we are going to pay. The key word there is going to. We have not yet received, or, not yet paid and not yet received that in this instance. But in both instances, especially here with service revenue, we want to record that at the time that we have earned it. So even though we haven't been paid cash yet, we're still recording the revenue and recording this asset that will help us track our receivables so that we can ensure that we actually do receive the amount in the future by having a listing with the amounts and who owes it to us, etc. I'll finish these out for you all, since I think this is helpful to kind of work through. This can be a little tricky as you start learning about debits and credits. So we received an invoice for $60 for PG&E. So that's going to be an expense. And we're looking at a utilities expense. And we said we received the invoice, but we have not yet, not receivable. We want accounts payable. We haven't yet paid the amount. So at this point, when we receive the invoice, we owe the money at this time, but we have not yet paid it. We're going to say May PG&E bill. And we owe the money. We've incurred the expense. We want to record the expense portion to note that we have recognized that expense for this month. But our payable here is a liability, to an amount that we will owe to that will represent the fact that we are going to pay this amount in the future. Just like with accounts receivable, it's an asset. We're going to receive this amount. Accounts payable is a liability. We're going to pay that amount going forward. Okay, this one we're purchasing some equipment. So here we can debit our equipment account to reflect the purchase, and we issued a check, so that's going to reflect in cash. Remember, writing a check is the same as making a cash. We don't have a separate checks account. That's just going to be our cash account. We'll say equipment purchase, and we have $400 of equipment, and we're increasing our asset and decreasing an asset, but increasing our equipment asset and decreasing our cash asset. Okay, here we paid $80 for 6 months of insurance, and since we're prepaying the insurance here, we're going to hit our prepaid insurance expense account, and we're going to credit our cash. Let's just say prepaid insurance payment, and this is an asset that represents 6 months, and so we were to figure out how much of expense per month we're prepaying, we'd need to take our $80 divided by 6, and that would be our monthly expense amount. And when the months elapse, so if we're paying this on May 7th, if this is for starting the month of May, 6 months starting the month of May, at the end of May, we would want to record 1/6 of that amount, reduce our prepaid insurance asset by 1/6, and record an insurance expense for that amount as well. And let's see. Okay, so this one we actually received cash for our services performed. So to differentiate from an accounts receivable like we booked above, we'll say services provided for cash. In this instance, we're going to say 180. So our cash asset goes up, and we record the revenue associated with earnings there. So hopefully that's helpful. Debits and credits and journal entries, very important concept in accounting to become comfortable with, and something that we're going to be continuing to work on. You would be utilizing debits and credits, journal entries. That's really how we record our accounting transactions. So if you're having any issues, definitely practice. Reach out to me if you need any clarification on anything. So, okay, now we're looking at financial statements. And here, so we're just going through and, kind of filling these out. Where is our consulting revenue? So just find the right account from our listing up here. And then if you look at revenues, we've got 240. So that's how you get, your X's here to go away. And your account, you have your types of expenses and then your amounts, and then you will so this will be your total expenses line, and then you'll fill this out with this will be net income, essentially, a little hint for you, and that's revenue minus expenses. So you've got lots of examples of this in your textbook, etc. So I'll let you refer back to your reference materials in terms of how to prepare these different financial statements. So you have income statement, retained earnings statement, and then balance sheet. And I think you all can, guys and gals, can finish that out. But again, any questions, let me know. But I'm going to let you finish filling that portion yourselves. Record the appropriate journal entry for each transaction. So I think here we're just basically doing the same thing. So this is just more practice with journal entries. We might be posting. Let me check this here. So again, record your assets and your debits and credits, and then you can put in your debit or credit, or put in the amounts to get your X's to go away. So just more practice with journal entries. And yeah, let me know if you have any questions on this. Some of these, I'll do this one real quick because we didn't see this on the last portion. For receiving payment from a customer for work done last month, this is going to be the cash that we're receiving. But remember, when we performed services previously, we didn't, and we recorded the revenue, we would debit our accounts receivable to increase it. And now we're receiving the cash. And so that placeholder of accounts receivable essentially will go away, because we don't want any accounts receivable left if we've already received that amount. So just a little helper there for that one, but I'll let you all work on the rest of those. I think we covered most of those types. You refer back to the portion of the video where we looked at the journal entries previously for most of the explanations on similar transactions, and look into your book and your notes and etc. for other help there. So I think this one is relatively easy. So if you just kind of look at your all you're going to have to do here is, you can use your Excel formulas to go through and do the calculations for the debt ratio and your return on assets. Let's see, what do I want? Average assets is given to you in this instance, so you've got averages there already. and then you can make a selection from which one is most highly leveraged, which company financing, which company most effectively utilizes its assets, so which one has a higher oh, there you go. Okay, I thought there was less. So here you can, I mean, just as a note, be careful. That's portion of the explanation is a little bit hidden there. Which company relies most heavily on equity financing? And which company? Let's make sure there's nothing else there. That's it. Yeah, most effectively utilizes its assets. So this is a pretty straightforward. I don't want to rob you of the joy of figuring these ratios out and putting the formulas in. So work on that yourselves. Let me know if you have any questions, but I'll leave that for you all. Record the appropriate journal entry. So again, more journal entry practice. So like I said, very important to get a lot of practice with journal entries, and just to be able to go through and understand what debits and credits, and how the accounts are affected, what's an increase and a decrease. So again, you should have lots of references from the previous problem in your book, and I'll let you work on all those. And one more problem here of financial statements. So yeah, hopefully all this makes sense. If you all have any questions, please reach out. Don't spin your wheels too much if you get stuck on a certain area or you're having questions. Try your best, but reach out and or have a question for class together that we can go through, and hopefully we can get you unstuck. So thanks everybody. Appreciate you all, and have a great day, and we'll see you in class.